What's happening, YouTube? It's Matt Faircloth. Welcome to this Mentorship Monday program. Like I said, my name is Matt. My company is called the DeRosa Group, and we're a real estate company dedicated to transforming lives through real estate. If you guys have real estate questions, you want to just send them over to us at helpme@DeRosaGroup.com. That is helpme@DeRosaGroup.com. And we might pick your question and answer it right here live on the YouTube channel for you and everyone else to learn from. This question is something we've answered a bit in other forms and fashions, but a different angle of attack here from my friend Prasanth, who wants to know about selling their home and not having to pay much, if any, taxes on it. And I should just say real quick that Matt Faircloth and the real estate company of the DeRosa Group is a real estate investment company. We buy apartment buildings and those kinds of things. I have done a lot of single family home transactions, and I have sold homes that I've lived in without paying much, if any, taxes on them. So I know about this as an experiential person, but I do not know it as a CPA. I'm not a CPA. I am not a lawyer. I'm not any of those other kinds of things. So Prasanth, you first of all need to talk to a CPA, the tax advisor that can give you tax advice. I'm just a fellow real estate investor like you, but I'll be happy to give you my thoughts. Prasanth's story is this. I had a home and used it as a primary for a couple of years, 2 years, then converted it to a rental. Now, after 3 years, it looks like the only way to save on capital gains, save tax on capital gains, is to sell. The thing is, Prasanth, that there is a covenant on how long you can live in a house and reap the benefits of a primary residence tax credit, right? The way that it works is this. If anyone watching sells their primary residence as of today under 2022 tax code, if you sell your primary residence and you're single, you can keep up to $250,000 tax-free. And if you're married, $500,000 tax-free of those sales proceeds from the sale of your primary home, and then take those proceeds and roll them into the next home that you have tax-free. You don't have to roll it over. You can take some of it and put it in your pocket, some of it put it in the next house. You can sell your house and keep all the money in rent. Anything above that, there is a covenant there that you can rent the house out for a period of time. If you're going to rent out your house before you sell it, you can still sell it tax-free. The rule is currently that you need to live in it for 2 of the last 5. Well, for your situation, I believe that you're lived in it for 2, then you leased it out for 3. That totals 5. So you might want to sell it right now, because as long as it qualifies for 2 years as your primary residence of the last 5 years, you're okay. If you rent it out for another year, then you fall out of that. You have to move back into the house. So a few different scenarios play in here. Let's say not Prasanth is watching and they buy a home and they rent it out immediately. It's rental property. They rent it out for 2 years. They want to sell it. They also like the house a little bit, maybe want to move in there a little bit. So what they do is tenant moves out. They personally move in. They live in that property for another 2 years. Now they've owned it for 4 years. And you're like, you know what? This is okay, but I think I'd like to move somewhere else. They then move out of the house and put a new tenant in for the last year. That's 5 years. They've lived in it for 2 of the last 5 years. Rented it out for 2, lived in it for 2, rented it out for the last 1. That still qualifies by that rule. Any 2 of the last 5 years, any 2 of the last 5 years. So as long as you meet that percent, then you're okay. So your situation works, and guys, any combination you want to come up with there that works, then you can sell the home and you can abide by that rule of selling your primary residence and keeping $250K for yourself, keeping $500K if you're married. That's the scenario. That's the scenario that works here. That's the IRS, not me talking. You guys should check out Investopia, which is where I got that answer from to confirm it. So this is not my words, this is Investopia. I go to Investopia all the time for real estate questions. You guys should check it out too. For investing questions like selling your residence or 1031 exchanges, all that kind of fun stuff is on Investopia. Bottom line, guys, being able to keep as much of your capital gain on something, being able to parlay it into something else is a great key to wealth. So if you're selling something, you can minimize or avoid taxes altogether and then roll that into something else that produces cash flow, produces another investment for you, minimize that taxable hit, allows you to participate in compounding interest and taking your returns and parlaying them over and over and over again. And that's a great key to wealth. So Prasanth, you're on the right track. I hope you're able to sell that property and keep all those proceeds for yourself. Guys, go check us out at DeRosaGroup.com to hear more about what we're up to, the cool things that we do. And you can also send an email question to helpme@DeRosaGroup.com. That is helpme@DeRosaGroup.com. And we might pick that question to get answered right here on YouTube for you and anybody else to learn from. Thank you, Prasanth. Thank you guys for watching. Have a great, profitable week.